Hello, how's it going everyone? Today I'm going to talk about Wish again. And if this is your first time on my channel, please give me a like and subscribe and make sure to turn on your notifications. As everyone knows that Wish hit the rock bottom at $1.60 like 2 weeks ago. So after the Fed released its rate hike back in March 15, most of the small cap, tech stock, and the overall market rebounds after that, right? Wish rebounds from $1.60 all the way to $2.50 something cents. And that was a really good reversal, and that was a signal of a rebound from the bottom. If you agree or not, but that definitely set a temporary bottom for now, at least. To determine is this a true bottom or not, okay, there's a few scenarios that we're gonna talk about it on this video. But from the technical analysis standpoint, we at least broke the downtrend for now, temporary, okay? So it doesn't matter you're bearish or bullish on Wish. Speaking from the chart, we definitely broke the downtrend, but is this uptrend going to be continue going forward? But it's going to be determined a lot of macro factors. So how the Fed meeting is going to be in May 3rd to 4th, right? So that's going to be the next discussion the Fed going to have and for the next interest rate hike, right? So it's going to be 25 basis point or it's going to be 50 basis point. Or it's going to be any surprise on the next Fed meeting. So we at least have another 5 to 6 weeks before the Fed meeting. So also the war between Ukraine and Russia is still going on, and also the oil price is at $110, $120. All those factors still going to drive the inflation is going to be at 7 to 8% going forward the few quarters. And the supply chain issue is still there. So another issue that we're looking at right now, there's a lot of analysts and billionaires are looking at that they're thinking about. So there's a possibility that US will heading into another recession. Recession is a lot bigger problem than inflation. So inflation we can address by interest rate, and inflation is a lot easier to fix. So recessions, you have consistently couple quarters that have negative growth on the GDP, right? So the economy is actually shrinking. People gonna spend less money, and the unemployment rate is gonna be higher. Recession is gonna be a bigger problem to be to be solved. So a lot of people is gonna be worried about recessions, right? So risk price is its own problem, right? They have so many macro problems right here that is driving the price. It's putting pressure on the price right now. It's still sitting at $2.31. And as managements that put in a lot of improvement strategies and try to fix the apps, try to redesign the apps, and have the risk clips, it actually give a lot of value to the app. As a risk user myself, then I tried it and I look at it, and you compare to the app before. Now the app is actually a lot better than before. As you can tell, the management and the teams are actually working really hard to improve the process. As investors, we always want to look at the macro problems, like what changed the stock market. As you can see, there's 5 Wall Street analysts on the average target price at $3.60, and this is like a short-term target price. That is still very low considered how the intrinsic value of the app, right? But even $3.60 from like $2.30 right now is still a lot of upside from being the 12-month period, right? Buying a stock or investing in a stock, do not really go by what the Wall Street analysts are forecasting the target price, right? Because usually the analysts are follow whatever the trend of of the stock, right? If the stock goes up, the analyst is gonna be forecasting a lot higher than what it is. If the stock going a downtrend, the analyst is gonna be putting a really lower price for that for that particular stock, right? The analyst is also going to look into the technical analysis to determine that, right? And also there's a short side or the buy side of the analyst. For you to buy into the stock, and make sure you do your own due diligence. Do not relying on the forecast target price of the analyst, right? And based on the technical analysis, so right now we are sitting at $2.30. So we are sitting at a very good support level. So next week is really important for us to see if it's going to hold this support level or not. So if we consolidating around $2.30, if we can break the $3 level, that would be a perfect resistance that we want to break that, okay? Like if we can break that $3 level, that's gonna be another signal that we're gonna going back to the uptrend. Like the price still sitting at $100 to $200 EMA. So we started that 5% pullback, still considered healthy, right? We've been going up 3-4 days from $1.60, right? So eventually that you will have that healthy pullback. So $2.30 is the healthy pullback. It's not a huge correction back to the downtrend, right? You see it consolidate this level to break the $3. Hopefully the $3 break, then we're gonna see $5, right? So our goal is, to be realistic, right? So we want to see Wish to fill that $9 gap this year, okay? So this year, just be realistic. It's gonna be pretty hard to see that $20, $30 target price, right? Just be realistic. So we need to break that $3 and then go back to $5. Hopefully at the year end. So after all the strategy in place and the third quarter and the fourth quarter, it's gonna give us a better number so we can fill that $9 gap. I'm glad to see that risk broke that $1.60 downtrend back to $2 level, and that make me feel a lot more comfortable because you don't want it to sit at the $1.60 level or below $2 for a long time because that's very unhealthy. But right now we're sitting at the $2 range and we try to oppose that $3 resistance. That's at least a great news for this couple weeks. So guys, I hope this video is helpful, and please give me a like and subscribe and make sure to turn on your notifications for the next video. Thank you.